You're muted.
There we go.
There we
Just
go.
came up.
Perfect.
Howdy.
Hey,
I see you.
there we
Yeah.
go. How you doing?
Well, we see you too.
Uh-oh, that could be good or that could be bad. That could be bad. Tony, good job today.
Oh, did you get my text?
No, ma'am, I didn't. Hang
I
on.
sent you a text.
Let's see here. Hang on, I apologize.
Sure.
Is it to my cell phone?
I don't know.
Oh, I don't have anything here.
Okay.
Is that Matt?
Hey, Matt.
It wasn't bad. No, I got the one share out like you recommended at 14:45:56.
Yes. Good job. Love it.
And thank you. Your strategy, I will follow.
It works. Good for you. I'm happy for you, Tony. That's just great.
You. It's just a matter of repeating and doing the same thing over and over again, and then it becomes a habit.
You got it. Just like a machine.
Thank you for being such a great supporter.
This is great. Good job, Tony.
Thank
Matt,
you.
how you doing?
I'm doing well. How are you?
Man, we get to meet face to face. Is this great?
I know. Look at what technology can do, huh?
I'm telling you, it could be good or it could be bad.
Yeah. Usually I'm on the bad end of the side of the technology.
Me too.
So it's good to be
but only on
day.
day. Anyway, hey, thanks for doing it, man. It's just good. I love your success and just talking about stuff.
Yeah, absolutely. Thanks for having me.
And Owen up there in the upper left-hand corner.
Pleasure meeting everybody. Owen, finally nice to meet the picture to the Twitter handle. That's nice.
Yeah.
Yeah,
it's
good
awesome.
to see
How things going for you up there? Pretty good?
Yes, things are going pretty good. We got hit with a crazy storm this past weekend. We got about my parents got about 12 inches or so.
Ouch.
A couple of days or so. So yeah.
That's tough sled. We didn't get that. Yeah. What's the temperature like up there right now?
Cold. Downstate, it's not bad. We're probably, mid-teens up north. They're looking at -5, something like that.
Yeah, I think right here in St. Louis right now, I'll tell you real quick, the joys of modern technology. Here we go.
Hey, Ryan.
Hey, Ryan, how you doing?
Hi, everybody. Good, how are you?
Good to see you. Yeah, right now it's 19.
Chilly.
I'm a brand new member. I'm happy to be here.
Good to have you here, buddy. This is awesome.
Welcome.
This is the group. There's a lot more.
Can I just ask you a quick question? I don't know how to get my face,
camera?
The camera. My camera is all butch. There we go.
There it is.
There we go.
There we go, Tony.
Simple. I keep forgetting that I actually cover it up.
Oh yeah. Yeah.
Okay, now we're set. Now we're all set.
I got my hair done for this today, I'm telling you.
Good.
So
that's a quick solution. Thank you.
That's right.
Thank you.
Matt's laughing.
Yeah, I'm sure Matt thinks I'm very, very ill-equipped to deal with technology.
Oh, hey, I'll tell you this. There's a person in this room right now who could tell horror stories about me, and his name's Owen Larson. The guy just shakes his head. I call him up. Yes, he logs into my computer and fixes stuff. I don't know what's going on.
Yeah.
The guy could steal me blind.
Nice to meet you. I'm Tony Lee.
Pleasure to meet you.
Old member.
Yeah, no, pleasure to meet you. It's funny that you had, something over your microphone or your camera there. I always do that on meetings too.
Thank you for making me feel better.
No, it happens to me too. Not a problem.
Okay.
Tony is a veteran IBD meetup member. I mean, I've known Tony, 10 years?
I think
maybe?
so.
10 plus years.
Yes.
And Owen too.
It's been a while.
Yeah, I met Owen, just so you all know, I met Owen at the IBD meetup. Here's Aaron.
That's how. Oh.
So yeah, that was great. Yeah, I met Owen, and then I knew he did computer stuff. So several years ago, I called him up and said, hey, I've got an idea. I want to do something here. And he hung up on me the first time, of course, but everybody does. And then he finally came in and said, yeah, let's do this. let's do this. And it's been great. It's been a good, positive experience. Can everybody hear me okay?
Yes.
Yes.
Working?
Perfect.
Sweet. Awesome. Man, I like the pictures. Look at that. This is great. There's Evelyn.
Hi, Evelyn.
Hello, good to see you.
Hi. Yeah, nice to see you again.
Yeah, this is great. It's great. There's
There's
Denise.
Denise.
Oh, Denise.
Wow. We've got 3 people right here, right now. 3 people that I met when I was an IBD meetup co-leader. Owen, Tony, and Denise.
Hi, Denise. How are you?
I'm fine. It's nice to have another girl in here.
Oh, Evelyn is here too. So don't
Yeah.
Yeah, don't
miss
count me
her.
out.
More women, the better.
How nice.
This is great. Denise's dad owned a heating and air conditioning company, cooling company. Chuck, what a great guy. What a great guy. And a veteran also. And man, he'd come over to the house with his team and do stuff. Those guys were great. Did they help us?
Right now.
Pardon?
I could use him right now.
Yeah, no doubt.
I have a leak that only happens when I run the dishwasher, and I had an appliance man come and he said, your dishwasher's not leaking. And I'm like, but it only happens when the dishwasher runs. And he showed me how the pipes go, and he said, your dishwasher's like over here, and that pipe is over here. And I'm like, so now I have to have a plumber come in and figure out what's going on.
Oh, good luck. If you need a good plumber, I'll tell you the guy's awesome.
Okay.
Just for what it's worth. Good, trustworthy man. He's like your dad. Good guy.
Yeah, I need one.
Okay, we'll talk.
Yeah.
Yeah,
And you gotta help me. I get scared and I get out of these stocks before I should, and then they go riding up. I've been burned. Selling is my worst trait, I guess is what I would say.
Oh yeah, selling's hard.
And I've done this twice now, real close together, and just got scared yesterday. I'll tell you, I got scared on. I was in Roku.
Yeah.
And yesterday, the guy's working on my dishwasher, and I brought my phone up, and I was reading a book, and of course, I pick up the phone, and I'm like, oh my God, it dropped $10. What the hell happened? So I ran downstairs. I got out of it right away. You know what happened today? So,
Oh yeah. Yeah, I know how that goes. Yeah,
and
that's
the funniest thing, in between the 2 stocks that I did, that the one in between, I said to myself, no, don't get all hyperactive. Just settle down. And that one I did good. The one right before this, I did
Good.
okay on. But
good.
2.
I'll share, and Matt's in the upper corner there, and Matt and I've talked quite a bit through the years too. Something I found really helps, and you know what I'm going to say, but it really helps. We all know this, okay? And I don't want to turn this into a lecture or any of that stuff, okay? But it's what's up here that's the biggest part of this whole game. And we all know that we can control this up here, things will go a lot easier. So I did a lot of research on this through college, graduate school, and all that stuff. Tension, stress, and we all know that stress can derail thought processes. So it's like, well, what can I do to minimize stress? We can't get rid of it. Okay, we know that. So what do? And this has really helped me through the years. I mean, really helped me. And you know what I'm going to say, so don't hang up on me or disconnect. Matt's going to laugh. No, don't. Just sell some into strength. And you can say, quantify the statement. Sell 20%. If you own 100 shares, sell 20. Sell 20. It allows us to let other shares work much longer. By locking in a good profit, and then I want to stop talking about this, but I think this is really important. By selling some, we know that we've made money. We could sell it and it can come all the way back down to our purchase price, and we can sell it down there and we still made money. By so doing, pardon?
I still made money. I just
good. That's awesome. Yeah, and then it allows us to let these other shares work longer. And the other thing I love is I love using the 8-day exponential moving average, focus on the daily chart, and just let it work. And the other thing that to me is very important, I'm going to say this, and I say it all the time, we can never let a really good profit turn into a loss. And by selling just 20% after it's made a good run, we all know it can come all the way back down to our price and we're still going to make money. And by knowing that, it alleviates the stress, which leads to clearer thought processes and thinking, and allows us to let it work longer. Not get sloppy, but it's the best thing since sliced bread. It took a lot of pain and heartache for me to get that down, and a lot of almost sleepless nights, tossing and turning, saying, how can I? And you got to remember, and you all know this, well, God blessed us. We had 4 kids running around, and 4 of them in private schools. The money was going out the window every month. I mean, the bills were just 5 figures every month, going out the window. So it's like, I got to do something here because I'm sabotaging myself. Anyway, that's it. I'm done. It was great to see y'all. Have a good night. So Evelyn, it's good to meet you too. This is great. We got Ryan.
Yeah. I hope you're not too tired of all my questions. I'm always bombarding you.
Oh no, seriously. I have all these quotes stuck in my head, and that's why I'm just starting to lose my hair. Just starting.
Thanks to me.
Work with me. No, but it's the truth. I read this quote years ago, and I forget who said it, so it's not mine. He who never asks knows either everything or nothing. And I really believe that it's so important for all of us. Ask questions. And I you know what it does? It helps me know that you're engaging. And anybody who's engaging, that's willing to, I'll give them all the time in the world. I'll answer these questions. And I'll also tell you this, folks, and I really mean this. I take the questions really seriously. I mean, really seriously. And maybe you think I'm corny, I'll say it. There's times I'll pray before I answer questions so that I don't screw things up. Just no, I'm bearing my soul to you. And it's like, let's try to figure this out. So that's it. That's what we do. Anyway, I'm done talking for now. Let's run with it. Should we, or should we wait, Owen? What would you like to do?
Oh no, let's go.
Let's go.
Let's go.
We got Matt here.
Yes, pleasure, Matt or Pat. Thanks for having me, Owen. Everybody, it's a pleasure to meet everybody.
This is great.
Pat, one of my favorite quotes that I believe Ed had told you was about selling some into strength. Is that where you got that whole process? Just to clarify. That's
a huge part of it. Yeah, Matt and I have known each other and talked off and on for a while, and you're just a great guy. He's a VIP. Okay. And you can say, well, how did you meet him? On Twitter. That's it. That's it. Someday I'll meet him face to face, but this works out great. And yeah, years ago, and you probably all know the story, but I think it is pretty cool. I was invited to go to a technical trader seminar in San Francisco. So I went, and I knew that Jack Schwager was going to be there. And if you don't know who Jack Schwager is, read the book, Market Wizards. He's the author of that book, Interview with Top Traders, Market Wizards. It's one of the best books you'll ever read. It will help you. It helped me. And I've studied it many times over. And but Ed Sakota was there. And so after the meeting, I got to talk to him one-on-one. And it was really cool. He had bifocals on and stuff like this. And I'll never forget. I asked him a question. And of course, me being this going back a long time ago, you treat him with respect. And I said, Mr. Sakota, can I ask you a question? So I asked him a question about price movements of large cap versus small cap stocks. And this is all he does. He has bifocals on. This is all he does. Tilts his head back. He goes, it's an interesting question. What do you think about it? And that was it. That was it. He challenged me, and we had to hash through it and do it. And so then I talked a little bit more. And this is one of the biggest mistakes I've ever made in my whole life. Okay. He goes back, he goes, yes, that is quite interesting. He said, would you like to do some work on that? I said, well, yeah, that'd be great. And me being the idiot that I am, I didn't follow up with him. Such is life. But anyway, Matt, that's it. Yeah. Ed Sakota, buddy. What a guy.
Yeah. I obviously have been a VIP for a while. You know that.
Yeah.
And you post this thing about Ed Sakota or Sakota about how selling into strength usually leaves you no better at the end of the day in the profit loss section, but it helps reduce the emotional tension that's there, clears your head a little bit.
You got it.
It can't be, more true than to sell some into strength. Because at the end of the day, your stop loss hits, selling into strength reduces that anxiety. You live to breathe another day.
That's it, Matt. It's so true. For those that don't know, I'll introduce him formally here. This is Matt. All right. Matt is a VIP. Matt's been a VIP for a while. And I need to tell you all this. I've never met him. Okay. We've talked on the phone. We've gone back and forth. But I'll also tell you the truth. He's honest God truth. I never knew what he looked like until just now. Okay. So that's just it, But he's passionate about the stock market. And we've had some long talks about different things. And Owen and I were talking and said, yeah, Matt's a good guy. We should bring him in on this and have him just talk a little bit about his story. And I think it's something that we can all, and me too, we can identify with it. It's like, hey, that guy sat in my seat. I know, he's gone through the stuff that I've gone through, and that's Matt. So he's a good guy. And he didn't pay me to say that or anything like that. But if you need my address to send the check, just
well, I'm going to take a snip of that and I'm going to promote it. So
there you go.
I
Hey, Matt, what was the hardest thing that you had trouble learning and really making that concept your own?
That's a great question, Tony. And I can tell you right up front what it was and what it is. Writing trends.
Absolutely. The key list is great. It provides so many opportunities to make a very good either primary income or secondary income. The opportunities are there. The work just needs to be put in. But the biggest obstacle I think that I had was probably trimming losses at a point where it was manageable. So I was letting them run a little larger, letting my emotion get into play. That was my biggest fear was, let's take, for example, Denise's entrance into Roku. I was in Roku. I watched it go down 10 points. I was out. I watched it go down. I was out because I've been in positions where 10 points turns into 20, into 30. And then you freeze, right? You don't know what to do with it. You got all this capital tied in and you're lost. You're down a considerable amount. You don't want to sell. That emotion plays into you. It'll come back. And sometimes they never do. So I was out of Roku yesterday. I was looking at the level of Roku going over yesterday's tops today. And I re-entered. So I wasn't afraid to re-enter. That's a big thing too, which took me a long time to get used to, was the re-enter processes. Zoom is another one. I struck out on Zoom probably 4 or 5 times before it hit decently, the other day. But I was, back and forth getting caught in the chop before it finally started to move. So cutting losses was a big problem that I personally had, whether that be, my own personal problems as a person or what have you, because you're learning yourself as well, in the market. It's teaching you your weaknesses, right, as a person. And if you can't confront those weaknesses or find something to combat those weaknesses, the market will humble you in some nice ways.
Good points, Matt. Good.
So how I mitigated that, I took myself out of the picture. I started, I for the most part, I didn't use stop losses, which actually, didn't help. So I started incorporating stop losses into my program, as I was learning the system, and I was letting my system do the work itself. I wasn't micromanaging my positions. I was risking accordingly to what, my plan was, and I was adhering to that. And I was watching those little gyrations kind of play out, according to the risk, and they would, for the most part work out. And if they didn't, I trim my losses and look for the next opportunity. So the stop losses help considerably. Yeah.
Do you put the stop loss higher than the price you want to get out? Like say you want to get out at 100, would you put it at 101, or do you put it at the price that you want it? How do you use the stop loss?
Yeah, so I'm gonna take an example. Let's stick with Roku. So Roku, I would have bought more above yesterday's highs, 449.20. Let's call it 450. So at 450, if it begins to run up on me, maybe I'll add a little bit more. I'll pyramid into a position depending on, how aggressive I want to be, or the market. That's a good play that Pat told me in Mission Winners, is the market needs to be on your side, and it helps tremendously. But that stop loss, maybe a normal gyration in Roku is maybe 10, 20 bucks. So maybe I only want to lose 2% of my overall capital. I'll play within those numbers. So if I'm betting $1,000, I'll lose, 2 or 3% over that. So maybe like $9 loss. If there's a lot of gyration, like maybe like Amazon or, Tesla, maybe I won't go as heavy in those positions, because I don't want to, 100-point swing in my position with the blink of an eye. That mentally will mess with you. It keeps you up at night. It gets your hands all sweaty. It's just, you don't want that. You want it to be simple, boring. You want it to be boring. So you're not, always checking your phone and thinking, okay, is it going to go down? Is it going to go up? So if your risk tolerance is maybe 5% on a position, I'd set it below, your entry at 5%, and see how it looks from there. Drill down to maybe like an hourly pat or like a 30-minute. And as it's approaching your sell point, your stop loss, take a look at it. Maybe the volume is nothing. Maybe there's nothing there. Maybe it's actually drying up as it's going towards your stop loss. So maybe you want to give it a little bit more room and see what it looks like. Don't be afraid to sell, but the volume might be drying up and ready to pop, because I've been in those times too, where you get to sell and it turns right around and goes back up.
Yeah.
Happens all the time, but you can't let it get to you, right? That's another mindset thing, is you can't let that, it happens. It's part of the game. Can't let it mentally defeat you. On to the next one.
May I ask a question here?
Yeah, absolutely.
So let's say you have a full position in Roku here. I love how you said, and I know you say this too, Pat, let the system do the work for you. That's probably my biggest weakness right now, is micromanaging positions. Let's say you're at work right now, you have a full position in Roku. I'm assuming that you may have a stop loss near the 8 EMA. I know you'll scale that out, and I'm not sure if it's thirds or fourths, but will you have those preset, like upon, I don't know, if you're going to be away from your computer for the day? Like, will you have multiple stop loss orders set, or just a primary one?
Great question. So yes, if I'm going to be gone, because I do have a regular job, it's a little different now because of COVID. And for those who, are working from home can appreciate that. It's way different now. But traditionally, I'm out of the house. I'm busy. I can't be watching my positions like I can now. So when I am out, yes, I will have several levels of stop losses, because maybe a 5% stop loss, it doesn't have to be the full position at that price. I can increment it into a 5% total loss if I want to take it that large, right? So, let's say I bought Roku at 450 today. I'm looking at an hourly, it's 462.5. I'll set it maybe $1 below that. and then maybe I'll look at the 20-day too, 447. Maybe I'll sell all of it right there, because that'd be a 10 point or a $3 loss. But if it goes below that even more, maybe like a 440, like my regular stop loss, then I'm out of all my position, which might be half, right? I'll sell it in halves or quarters as it goes down. Does that make sense?
It does. Thank you very much.
Absolutely. But the flip side of that too is also keeps you in the position, because like I said, the volume could be drying up. Maybe you only got half a position, but maybe then it really takes off. But you're still in it. You don't have that mind game of, darn, I missed it. You still got a little juice in there, and just let it continue to run and play it accordingly, within your pattern.
Good deal.
Hopefully that helps.
No, it did. Thank you.
Keep asking questions, folks. So Matt, or no, I'll let you all talk. Go ahead. I'm just going to sit back and watch a little bit here. Okay. Just to clarify, Matt's probably further down the road than some of you are, as far as, investing and stuff like that, and doing the stock stuff. So hit him with questions.
I have a question.
Hit it. Good.
So you know how Pat's great with providing a great key list, and sometimes there are 20 stocks on the list, and then the morning comes, the bell rings, and then you're all excited, and then they're all like flashing alert signals. Like, how do you prioritize and select? Do you pre-select the stocks that you want to look at in the morning, or you just wait for the ones that have the volume? Like, how do you handle the key list in the morning?
Yes, another great question. When I started with the VIP service, Pat picks great stocks. You set all these alerts, and they start going off, and you're like, oh my God, what do I get into? This one's going off, this one's going off. Then you're you look at the hourlies on all of them, and it's a lot. It's information overload, right? So every night as I'm looking over the key list, I'm definitely refining it. Let's say Pat picks 10 stocks. I am refining that list to maybe only 3 or 4 that I really want to play in. Now, why or what criteria do I want to play in? Longer bases, tighter pattern. I don't like a choppy pattern. I love NVIDIA, but I love the base on an NVIDIA. But late, just the chop action, I'm not, the pattern is just, I'm keeping an eye on it because it can really move, but it's not a tight, clean pattern. It looks like it needs some more time to, base. So that's what I'm looking for. Pullbacks to the 8-day are risky, as Pat's mentioned. So if I am going to play it, I'm looking for a few things. Almost always, I'm looking for things that can move. Definitely things that can move. Not anything against the other stocks that are on the key list, because some of them can move, but maybe they don't, have as much juice behind them.
Mm-hmm.
So I love looking at the max list. Those really move. So, you get a good breakout on those. That's a day changer or a month or whatever. So I'm always refining the list and maybe only taking 3 or 4, setting personal alerts on them, whether I want to be a little bit more aggressive or wait a little bit longer. Maybe I see something different. I'm setting my own alerts, and I'm not even putting the other ones on my personal alert. I am focused on 4 or 5. I have a few other high flyers that have been hot lately. The cannabis sector has been rocking lately. So, I have a few, off of the key list. I have the key list, the max list, but I'm definitely refining it to, I don't need to be in 10 positions. I prefer 3. Three's way easier to manage because, all those alerts were going off at the beginning when I started this. And, I'd get into 10 positions and oh my gosh, watching 10 positions or having 10 different alerts and 10 different cell signals with layered cell signals in there. I mean, I don't have that kind of time. I mean, I don't want to, I love it, but my time is prioritized, right? So, you need to make it where it fits within your schedule. So, ask yourself what's your go-to. Is it a flat base? Is it a pullback to the 8-day? Is it just reversals? I mean, those reversals can be crazy gains. It's find that sweet spot, and for the most part just continue to look for those and perfect that. You see it all the time on people. They say it all the time on Twitter. Take something and perfect it. It works. He's giving you all the tools. It's there for you. Just hone in on your focus. That's where things I think will really change, is just honing on your focus. Because for me personally, if I can focus on 4 things, maybe, perfect. I'll divert all my attention to those 4 things.
Yeah.
Maybe I can scale into them heavier, scale out of them faster, whatever the case may be.
Okay, thank you. Yeah, the clean, simple base definitely works.
Yes. The longer the base, the better. Absolutely.
Yeah.
If I may ask too, do you primarily, with your growth and trend investing, play through stocks, options? Like, what's your primary type?
Yeah. So when I started, up until probably the last few years, all stocks, all shares. My trading has changed considerably. It started as a much longer term swing trader, weekly breakouts, using the same style that I'm currently using, but much longer. It didn't feel right. I started swing trading with, shares. That turned out, to be my sweet spot. Swing trading with shares. Then, you start to wonder, what's this option market like, right? I got to tell you, I've learned the hard way, for those who either have blown up an account on here, or maybe you haven't. Hopefully you haven't. But if you have, I've been there. It's when you start messing around with options and you don't know what you're doing. That happens often. So I started in options, completely got wrecked. It was awful. But I learned from it, I gained knowledge from it. And primarily now I trade options, my long-term accounts, retirement accounts, I trade shares. That's kind of where my mix lies. I'll still trade shares, especially on a good breakout. Like Neo today. Neo was a really good one today. If any of the other guys got into that, I bought shares of Neo. So kind of varies, for the most part, but primarily options, I would say now. I wasn't always that way, but primarily options now.
Yeah, I'm beginning to deviate away from them because a few bad days can add up quickly, and with a smaller account too, it's a little more rolling the dice, I want to say.
Yeah.
As I begin to get more educated surrounding growth and trend investing, I think shares might be a better idea. Because I just wanted to ask, let's say you open a starter position and you see a brace or like a pennant form in a few inside days, maybe add some leverage through options on top of your shares, but I could see how, again, that can get dicey.
Yes, it can get very dicey, and you just want to be careful with the amount of capital you have out there relative to your portfolio when dealing with options. If you can't watch them, and I mean watch them, then you, for the most part, if you're not playing long term, you should probably not be in options. If you're getting maybe you got into Roku, and it's turned out to be a great options trade, but don't, if you got maybe 100 shares or 2 shares or 10 shares in Roku, bet much smaller. And when it comes to options, because you're right, in a smaller account, options will wreck you. And it's not just the money. You always can make the money back. It's here that really screws with you. I'm gonna give this up. This is frustrating. If you follow the wrong people on Twitter, you see everybody posting these huge gains, whether they're photoshopped or not. That just messes with your mindset. You live in that environment, or we all do now, that everybody's got to compare or be bigger or this or here's that. In this game, it's you. And if you're comparing yourself to, so and so who's got huge gains and so and so and so and so, that's the wrong mindset. You gotta be within yourself. This is a very intimate dance. This trading.
That's a phenomenal point, because you can go on Twitter and see, right, people posting their P&Ls, and the comparison comes to mind. But you hit it on the head. It's up to you. That's the only thing that matters here. So thank you.
Yeah, absolutely. And then you begin to think, well, if they can do it, I can do it. And then you see the stocks that they're looking into, and you're thinking, oh, wow, GameStop. GameStop, everybody's getting in GameStop. I got to get in GameStop. A lot of options come into play then. I can make this into this. It's just a dangerous game, until you build a sound foundation of who you are as a trader. Finding that took me a long time, but finding out who you are as a trader, what your style is, really what you fit in, how you react to personal problems within your life, moving, kids, fights with a girlfriend, stuff, maybe a death in the family, that all affected me throughout my trading career and had massive impacts on my results. So as you find that out, you begin to learn a lot more about yourself, to where you can play in a little bit riskier assets. $50 might turn into $300. That's a win. Betting small on options is not a bad idea at all. $25 on this, maybe $50 on this, cut my losses if it's bad. If not, it hits big. But you have to be weary of the losses. It's easy to lose 30% on an option very quickly. Very quickly. So stick it with a small account like I did. Like I started shares, build up your confidence, build everything up, and then as things get larger and bigger, it's a snowball effect, and things become much easier. But it takes some time to get there. It's a big route. I've been doing this for 8 years, and the first 4 years I was swimming around with break even and blown up accounts. So it's it's everybody's own journey, and who knows how long it'll take you to get there.
Can I ask you a question on that follow-up?
Yeah, absolutely.
And maybe Pat can answer. When you're trading options, are you trading deep in the money options? Are you trading out of the money options, and how far out on the expiration?
Great question. So I played around with that as well to see where my sweet spot was lying. Is it not knowing, because I went into the option market not knowing really anything except they're very risky and high reward kind of thing. We've been talking about Roku lately in this chat. So I'll use Roku as an example. I didn't buy any options today. I was in Zoom instead. But on today, I walk you right through my trade. What I would do is, yesterday's high at 449.19. I'm buying next week's 450s. So as close as I can get to the breakout point, and within 2 weeks, I don't play much longer than that. 2 weeks is my sweet spot. You get a good bump. There's a lot of juice in them, And, options are way too volatile for me personally to hold them longer than 2 weeks. I'll get whatever I need to in the bulk of that movement. And as soon as they start jittering around on me, I'm trimming and reducing my size significantly. So I'm buying as close as possible to my breakout point and letting them run to as far as they will go. Hopefully the full 2 weeks, but it depends, right? The market, how it's looking.
Right, you got to watch it, and no. I appreciate you answering that. Thank you.
Yeah, absolutely. Did that help at all?
It did. Yeah, I was going to see if Pat or Owen or anybody had any other suggestion on the options. I trade mostly stock, but I do trade some options, and you just want to get the biggest bang for your buck.
Well, I'll jump in here a little bit with options.
Take it, buddy.
One of the things that can get you into a lot of trouble real fast with options is if your volatility is high. And the way to tell if your volatility is high is really simplistically, it's not low. So if you go to like ivolatility.com, I know it sounds silly, but it really is very true. It's you want to be able to buy something that isn't going to have the extrinsic value just sucked out of it and have the value of your option collapse on you. Matt's shaking his head. He's going, yes, I know. I've seen that happen. It's happened to me. So anyway, if you go to ivolatility.com, you can get a chart of that. I will say this. I don't do a lot of directional single options. I do a lot of selling of verticals. I'll sell verticals under the market, so I'll be short put spreads. And when you're selling a put and buying a put, you're selling volatility and buying volatility, so it kind of offsets. So you don't have to have that big volatility risk. So, like for instance, today, like with Roku, or I'm trying to remember what else I might have put on today, but where you've got something that's breaking out, and I did it on Neo. So I bought some more shares on Neo, but then I also sold spreads underneath went down a couple of strikes and sold spreads on it. So you can sell like a 5 wide or a 10 wide if you want to, and your risk is going to be the width of the spread minus your credit. But what I'll do is I'll come right back after that trade is filled. You guys interested in hearing about spreads, by the way? Yes, no?
Keep
going. I am, if you don't mind.
So your risk is the width of your spread minus your credit. And if you come back right after the trade's filled, so like for instance, I had some spreads filled today at like 77 cents. Well, my stop on that would be $1.40, essentially twice my credit. So I'll come right back and I'll put an OCO order in to sell it, or to buy it back, to buy it back for either $1.40 or 10 cents. So it's on autopilot, and I'll put those in as GTCs. And that way I can just let it go. I don't have to be concerned with it. I don't have to micromanage it. It's just going to do what it's going to do. I've stacked the deck in my favor. I've done it on a breakout. Most of the time they work. It's going to be underneath where the breakout was. It'll be a couple of strikes out of the money, not way out of the money, but a few strikes, a few strikes out of the money. Sometimes I'll look at a point at which, I might find support, and I'll put it right there or right under that support line and just let it work. That's that works out really well. I do that also on the die, the SPY, and the Qs. So anytime we have a pullback, especially back to the 20, I'll sell verticals underneath the market, and I'll go out 30, 35 days. Gives me an option, gives me the opportunity to not just bring in the premium, but to withstand the gyrations. So if we pull back to the 20, I'll be selling verticals underneath that. And then if we happen to pull back a little bit farther, I'll sell a little bit more. But then it'll give me an opportunity to go through the gyrations in the market. So if it comes up and it comes back down on me, and I'm around my expiration date or a week out, I can always roll that forward. I can always roll that out to the next month. And I'll just keep rolling them until eventually I can buy them back for less than I sold them for.
Good.
Does that help? Is that?
Yeah, that does help. Thank you very much.
Sure.
I'll chime
Pat,
in
did
here a
you
little
wanna
bit.
chime in? Yeah, did you want to chime in on that?
You go ahead, Matt. Take it away, buddy.
Oh no, yeah, he asked if you or Owen had anything to add to the option market. And I knew you were a rather large option trader back in the day, so
Yeah, we were moving it around a little bit. Just one of the best things, and it complements what both Owen and Matt are saying, is focus in this methodology on clean and simple base breakouts, just like we're doing with the stocks. All right. And you look at the volatility. If it's really wild, you're going to pay extra for that premium, which means you can maybe do some kind of a spread formation on that. And I don't want to get too technical right now, but a great way to really jumpstart an account or blow account up, can go both ways, is on clean and simple, those longer base breakouts. If you key on that, maybe go out one strike price. All right. Don't go crazy. Don't go big. Never try to make a killing with options. I heard this phrase 30 years ago. Never try to make a killing on options because you'll get killed. All right. Buy it and let it lift. Know this though, you're going to pay a little juice when you buy it, and there's time decay in that. And you probably all know what that is. And I'm not going to get really technical with all this today, but you go out, a 1 month maybe, or a couple of weeks, because most of the time on these breakouts, the action happens in the first 2 weeks. And so why pay all that time premium on the options? Get in there, ride it up. Don't overstay your welcome. Sell some of the strength, just like you do with the stock. And know this, you own an asset that is over time going to keep depreciating in value. Time value is going to run out against it and shrink the price. And so, and don't day trade them either. That's too fast. But if you focus, you've seen the clean base breakouts. If you do that and go out one strike price, maybe go out a couple of weeks, you should be okay. The other thing that's great is when I first started in the business, we only had monthly options. Now we have weekly options. Now that could be really good, but it can also be really bad. So just the last thing I'll say about it, and then I'll let these two gentlemen chime in, please control risk, because when that premium disappears, it goes away really fast. And never take an option into expiration where it expires worthless. Cardinal sin. Don't do that. Walk away with something. But please don't let your options expire worthless. That's all I'll say.
Unless you sold them.
Take it away.
Thank you.
Unless you sold them, Pat.
Pardon? Yeah,
I'm just.
I was thinking about that, but I thought I won't even get involved in stuff. That's a whole different animal, but it sure is fun.
yes, yeah, absolutely. So all great points there on options trading. And as you've heard myself, Owen, and Pat say, there's 3 different approaches right there to options trading. Whether you're playing the spreads or, you're just betting on long base breakouts. Ryan, that's how I was able to grow a relatively small account. All I did was bet, maybe on $1,000, maybe I only bet $100 on a long base breakout, and let it do its work for it. I was out quick if it went against me, but it is a good way to bankroll kind of a smaller account. But as everybody did say, risk is the most important thing when it comes to those. In time decay, when do I sell? If I get into options today on a Tuesday, I'm probably buying them for next week. I am holding my position probably until next week at this time, maybe Wednesday, because that time decay really kicks in, Tuesday, Wednesday of that expiration. And so you need a pretty sizable move once they start going against you. You can watch 10, 15, 20% gain go away like that just by time decay. And Pat's right. The move for most of these, before they start going sideways, the strong ones, 3 days, 4 days, maybe 6. 6 straight up days is a lot. And Pat will be the first one to warn you about the slope of the line on the 8 day. That's what 6 days kind of straight up would look like. So 3 days, you're kind of thinking, okay, some sideways action. Maybe I'll take some off of the table, let the rest play out, see how it goes.
And I don't want to get too technical, but complementing what Owen and Matt are both saying, there's 2 forms of premium in options. There's time, there's price premium, and there's time premium. So let's suppose that you buy, let's just make up a number, okay? The stock's $30 a share and the options expire this Friday, all right? You're going to pay a premium for that. You're going to pay extra for that, all right? That expires this Friday. There's price premium and there's time premium. You could buy, the stock's $30 a share and you buy a 30 call. You buy it today and there's no earnings coming out. Okay, we're not going to get, let's suppose you paid $2 for it, which is equal to $200. Each dollar equal $100 because you're buying 100 shares of stock. So you buy it for $200 that expires this Friday and the stock's $30 a share and it's a 30 call and the stock just goes sideways the rest of this week. As it does, the price of the option keeps dropping. And basically on Friday, the option will expire worthless. It's not worth anything. So you're playing with price action and you're playing with time action. And as time diminishes, that time premium decreases also. You got to factor that into it, which leads to another point. Know this, with options, and I'm sure you all know this, when it comes to options, that premium just before an earnings report, that juice, I call it juice, that juice is really high and you'll pay for that. And if the stock goes up, it needs to go up more than that premium, because if it doesn't, you could have a stock that gaps up 3 points, but if that wasn't enough, given the price or the strike on your option that you bought, your call option you bought, the price could go up on the stock, but the premium on the option could actually drop. And you're going, what the heck happened? Be really careful buying options just before earnings. Really be careful. All right. And I won't even get into, I'll let Owen and Matt talk more about that stuff. Just, they're a great tool, but know the ins and outs of them. All right. Please know the ins and outs. Gentlemen, take it away.
I just posted a link to iVolatility if you want to play with the volatility. But yeah, Pat's right. You buy options going into earnings, they really juice them up. And you can tell that if you're trading, I don't know how IB shows it. Anybody trade on Thinkorswim? If you trade on the Thinkorswim platform, it's over on the right-hand side. You can just kind of see the percentages and the numbers.
And you can actually practice doing options on Thinkorswim. Oh, if you do TD Ameritrade, you can practice. They have like platforms you can practice on. Good. Where it's like you're actively trading, but yet you're not.
Oh, on their paper trading platform? Yeah.
Yeah, paper. Thank you for the term.
Good. Thank you, Denise.
Uh-huh.
Appreciate it.
If I may jump in, I love the points being brought up because as a young investor, I have a more risky mindset. So I try to hit home runs instead of singles, and I'm starting to learn more often that I'd rather hit more singles than home runs.
Yeah, that's a good point. So, I'm young as well. So I thought risk, I'll take as much risk as I can get, at a young age. So I was, reckless. Basically, you could say, trying to put on sizable risk to grow a small account. You hit, a handful, right? You start doing well. And then it just takes one to really knock you out. And then you get one, it's a couple 100%, maybe a couple 1,000%. And then you kind of get that feeling of, well, I'm always going to be looking for that now. Those are thankful. Take it and leave it. It's, it worked out that great for you. Amazing. But do not do not expect, that to be the case every single trade. For me personally, most option trades, I'm out 40-50% gain for the most part. Maybe I'll let them run longer if they're looking great. Kind of depends. But for the most part, 40-50% on my money, I am happy. If they turn into a couple hundred or a couple thousand, wonderful, but that's not what I'm after at all.
Good.
That's a great strategy to take those options, because I know that one of the mistakes that people make when they start trading options is they look at how much money they can make. And that can get you into trouble. So yeah, you're taking profit at 40-50% of your profitability, you're in good shape.
Yes. Well, the other side of that too is, losses. 40-50% might be great as long as I'm taking smaller losses.
But you can scale. You can do that based on scale. You can do that based on how much risk you take on when you enter the trade.
Exactly. And, and I have since changed how I kind of go enter, on some options trading. I may, on Neo today, I entered an options and I bought pretty heavy right at the beginning, knowing in my mindset that I would probably bet heavier than I usually would. But by market close, I was going to get to my original allotment of risk. Meaning if I'm buying 100 contracts right out of the get-go, I'm hoping for a quick juice, for it to move quickly. And then I'm trimming, down to where my normal risk is.
Yes.
So I'm taking a little bit advantage of that. But, it reduces my anxiety because I already booked some gains. Now I can let my original investment grow as I would normally as it continues to run. And Neo was perfect for that.
Good.
Helps you with your sleep as well. It's very difficult to go to sleep after just buying 100 contracts of options. It's very difficult.
Yes, absolutely. You're up at 3:30, 4:30, checking the market when it opens. 4:30.
You're there at 5 p.m. when the futures open.
Yeah.
Kakawa asks a question here. Let's get this in. How do you enter a trade at the open? When you enter trades, do you enter trades with 10, 30, or hourly charts? And do you look out for volume as well? So basically, I think what's being asked is when you enter that trade, how are you determining that volume?
Yes, absolutely. Now, Owen, do you want to take that one? My computer locked me out here as I'm working.
Okay. I'll turn it over to Pat. Let's put him to work.
All right. Yeah, I like that.
Well, there you go. I'm kind of shy. I don't know, guys. I don't know.
I know.
Owen's like, here he goes. No, one of the things I love to do, and I know you all know this, but it's worth reinforcing and reiterating. When I'm looking at a stock, I always go to the weekly chart and the daily chart, and we're always looking for a pattern. And please don't hang up on me. We're always looking for a price pattern that's clean and simple that everybody can see. Why? Because it increases the potential that they're going to be buying too. I don't want to find a pattern nobody else knows about. And it does not need to be a cup and a handle. Okay? So just a clean and simple flat base. But as it's approaching the pivot, this works. And this is not textbook. This is the real world. As that price is approaching the pivot, instantly on my screen, I'm taking it down to the hourly chart or the 30-minute chart. And I'm looking for that volume surge as here's the line. As the stock is starting to approach this line, okay, if it's clean and simple tops, when it's hitting up here, I want to start seeing volume really surging on that 30-minute chart. Maybe I'll take it down to 10, but normally not. If it's real, if it's a really good breakout, you're going to see the volume on a 30-minute chart or hourly chart. If it's really close to the open, lean on the 30-minute. After the market's been open, like maybe 20 minutes to an hour, half an hour, you can revert to the hourly chart. But near the open, for the first 20 minutes, look at the 30-minute chart. So that on the stock, we're not talking options now. and look for that volume surge. People talk with their mouths and vote with their pocketbooks. You see that volume, it confirms something. It confirms that A, you're right, but it also confirms something really important. It confirms that other people see what you see and they're acting on it. They're buying. Flip that coin. If you see a great breakout and you take it down to the 30-minute chart and it looks, this is awesome, and you don't see any volume, guess what? People aren't acting on it. Don't impose your will on the stock. Or if you're doing options like these gentlemen, don't impose your will on it. It's not happening. Leave it alone. Leave it alone. You will find through time the best stocks, the best breakouts. There is a big volume surge on the 30-minute chart or the hourly chart when it's pushing through that pivot. That's confirmation to go in and buy. Last point I'm going to make, and then I'll let these guys talk. Buy there. Don't say, well, the entry price was $42. Well, I'll wait till 43 or 44 just to be sure. No. By doing that, if the pivot's 42, it's good above 42 and it's bad below. If you wait for 44, you got to give it 2 points before you're proven you're wrong. And then if it slips even further, you might give back 3 points. Why do that to yourself? Buy it at that right spot. Be decisive. Always focusing on volume. I'll let Matt or Owen talk more about that too. What do you guys think?
Some great points. He couldn't said it any better. You do need to be decisive. Early in my career, being decisive was another obstacle I had to overcome. Am I convinced that it's going to go? And if it's not, do I want to lose money? You just kind of get into some weird mindsets. And when it goes, you need to be without hesitation. You need to act. And I was thinking about that today. What would be the biggest thing I would tell myself, then besides risk, would be act without hesitation. If it hits your buy with volume, buy. If it's selling and it's hitting your stop loss, if you don't have one in place, sell without hesitation. Hesitation will ruin you in this game. Hands down.
Yep.
Hands down, it will ruin you. So how do I look at buying right at the open? Depends, right, on the setup. So like Neo, right? I bought Neo today. Neo, it didn't gap up right at the get-go, kind of moved it around a little bit. It shot over 59. I bought a little bit, 59 and a quarter. I bought a little bit more, 59.75. I bought a little bit more. Above 60, I was full position. So I was able to scale into it. I wasn't sure if it was going to work out on the open because sometimes I've seen them go the other way just as quick. But at least I don't have a full position in there. I'm dabbling with, some people call it starter positions. So maybe I have 25% of my overall position in that initial buy. Maybe, and to see how it works, for the 15, 30 minutes of the market, see how it works. You'll be able to tell pretty quickly if it's going against you or if it's running.
Yeah.
They just move that quickly. And if you hesitate and it moves and it continues to move, let it go. Let it go. Let it set up. Come at it another time. If a stock gaps up on you, Tesla is always a gapper. I love playing Tesla. On a major gap on Tesla, you got to be careful. Pat is very good about that. Watch it on a much larger time frame. If you're trying to get into it on a gap, I don't advise it. But if you're looking at it, 30-minute, hour-long, time frames on a big gap up, see how it reacts. Could fall. There looks like a pretty aggressive entry. You could go for it, but that's aggressive. It's does it play in your sweet spot? That's a pretty big gamble. You're not stacking the deck in your favor, and in this game, that's all you want to do. You want to come prepared. You don't want to be
True.
sucker, if you will. You want to be well prepared for this game.
Big time.
Hopefully that answers your questions on how to enter and exit on the open. Hopefully we answered everybody's questions on that.
Do you have anything to say on it, Owen? Anything you want to push on? You've been doing this a long time.
You're welcome.
I think one of the things that I've learned from you in the recent years is watching for volume. I know back when I first started dabbling with Bill O'Neill this goes back to 2004, I think, had a hard time with it, had a hard time with the breakouts. They would many times fail.
Yeah.
And it didn't take me those 16, 17 years to figure it out, but you've definitely reinforced it. I was just thinking, I don't want to make it sound like we've only been doing this for the last couple of years. It's been working a little longer than that. But I do remember when, not watching for that volume and then watching for it, it makes a huge difference in whether or not the trade works out more often than not.
I won't
and it's a big
think of that without the volume there. Even if it's a great name, Apple was today. Apple was a good example. I personally, I wanted to get into it. Pat had an alert out, but it was either my intuition, the volume was, good on the first hour. But then we had a reversal on the second hour. You could tell the juice just wasn't there. And, I'm sure if I look back on the feed, I'm sure Pat saw the hour reversal and let everybody know. But, it just, I drill it down on a 30-minute, the second half of the open. Oh, no, the first half of the open, it reversed. Some tail bar on the first 30-minute bar in Apple. So, you could just tell that it just wasn't ready. It just needed a little bit more time to do what it needed to do.
That's a great example, Matt, on that hourly. If you look at Apple on the hourly, you look at how it came up and it touched against the 200 and pushed it right back down. I like Apple. Pat knows I have an affinity for it, but I'm waiting for that to get above. I want it to get back above the hourly. He just laughs at me. I get back above the 200 on the hourly, and I think it'll have a tendency to be more successful with breakouts.
Yeah,
absolutely.
Is that a good theory, Pat?
Yeah, I could live with that. No, it's definitely. I'll slide this back. Yeah, stacking the deck in your favor. I mean, I'm sitting here listening, and it's just great because the wisdom that Matt's given, the wisdom that's Owen's given, and I'm not saying this to patronize those guys, okay? I want you to know that, but you can tell they've sat in that seat. Many of you, you're sitting in that seat. You're doing this, and anybody who says this is easy is a liar. This ain't easy, okay? It's tough. It's tough. And so the goal is try to speed up that learning curve and learn from people's mistakes. I mean, many of you know me, Owen's known me longer than anybody here, but hey, I've gone through some rough times. Have I ever cried about something that's happened to me? Yeah. I mean, there have been a couple of times I've physically had to get up away from my desk and leave because I did something stupid and it cost me dearly. It cost me, well, one of them cost me $12,000 in about 4 seconds. Stupid. So we try to avoid that. But their answers from these two guys is great. So I'm going to stop. Keep asking questions, folks. I love them. Don't be shy. We're all friends here.
Evelyn's thinking. She's thinking, what should I ask?
Go for it, Evelyn. This is your chance. You don't even have to type it.
Actually, I was wondering because with the volume question, right? And then I know you justify how you have to confirm a volume, and then you don't hesitate, and that's the part I need to work on. Is I hesitate, and then I see the price going up, and then suddenly it starts to shrink, pull back, and I'm like, oh, do I wait for it to pull back a little bit and then go in? And then in the back of my mind, like, well, I'm not supposed to buy into weakness, so what am I going to do? So I have that dilemma. And then also for today, specifically for Zoom, we were all waiting for your command to buy. And then I was looking at the price. It was like, I don't know, was it 422? And then it went up to 24. And then finally at 426, I believe. Or what was the price that you got it? Yeah, 426, you finally said, I'm buying. So I was just like, okay, but then I do see the volume. What are we waiting for? I was just wondering, is my gauge of the volume different from yours? Like, because I don't know, if I see the volume go above the average, is that deemed good volume, or does it have to be substantially above its 50-day moving average? Like, how do you gauge that?
Great question. And what I'm doing right now, I'm not trying to be rude. It's not that I'm not looking here, but I'm actually pulling up the chart on Zoom, and I'm looking at the day chart. Gosh, I wish we could share charts. That would be really cool, but that's beyond my comprehension. It lifted, but if I take it to the hourly, the volume on that first hourly bar on Zoom. Oh, by the way, folks, I'm looking, just so that we're all tracking together, I'm looking at the chart of Zoom, ticker symbol ZM. So it's on the key list, and I'm looking at the hourly chart. Gosh, I wish I could post these, but we can't. Anyway, but you all are at your computers by default, and so if you could punch up the hourly chart on Zoom, that would be great. And you can see that first hourly bar this morning, it ran up. Volume was pretty good, but it wasn't really explosive. But more importantly, look what the stock did. It ran up and tailed off. You have a tail bar on that first hourly chart, that first hourly price bar this morning. And then what did it do, folks? It went sideways. The second bar was a quiet bar. The third bar was relatively quiet on really low volume. The fourth bar this morning was really quiet on even less volume. You have 3 bars of declining volume, as you can see. And then finally, what happens? Look at that spike on volume, and it pushes through those tops. And then it started to lift. I was watching, and I said, that's it. That's good enough. And that's where we're buying it, because there was no power. The first bar had good power, but look at where it closed. It didn't close strong. Now, I will tell you this, on that first bar, if that stock had closed really strong on the first hourly bar on Zoom, I would have been tempted to buy some, but by default, you can see it didn't. So we didn't do it. And so then we waited, and then finally it took off. And I know you can say, well, gosh, Pat, there was a possibility to buy it right near 422. It was lifting pretty quick, and I was watching it, and the market was kind of squirrely. And I said, no, we'll go easy, and we'll wait, and we'll see if she can follow. And it did, and then it followed through. So hopefully we'll be in good shape with it. And if you take it to 30-minute, even if you take Zoom to 30-minute, look at the volume surge on that bar. Just to tell you, the previous bar on 30-minute, the stock did 153,000 shares. On that trigger bar, it did 535,000 shares. I say this all the time. People talk with their mouths and vote with their pocketbooks. Right there, they voted. And then it went. So anyway, I was watching it though. Evelyn, I'm with you. I understand what you're saying. It's like it had it, but it didn't really follow through. It just kind of meandered there for a couple of hours. And let's also factor this into the equation. If you punch up the spiders on hourly or 30-minute, you can do 30-minute or hourly, either of them. Look at the first hourly bar. Look at the first, really didn't do much. It didn't do much of anything. So then we'll take it a step further. We're sitting here talking about this stock. Was it on the NASDAQ? Yeah, it is. It's on the NASDAQ. So look at the NASDAQ. And how can we measure it? You just do it with QLD. First 30-minute bar was pretty good, but the volume dropped off versus the close yesterday, lifted up, and then it just kind of meandered. It meandered for the rest of the day. Didn't do anything. That's the 30-minute chart. Take it to the hourly. First bar was good, but if you look at QLD on hourly, and I'm going to stop talking here too much, I'm sorry, the volume really wasn't that robust. And it's a NASDAQ 100. The next bar, it ran up and actually closed near the lows on low volume. The the QLD just kind of meandered. So what were we waiting for? We're waiting for the trigger on the stock. Let me clean it up, sorry. And it finally came in, as you know, later in the day, and that was our trigger. And again, just to clarify, the time on that, this is Central Standard Time, just to let you know, that time is going in here at 13:30 Central Standard Time. In other words, an hour and a half, whatever, 2 hours before the close. That's where it was coming into it. There was your trigger, and that's where we bought. So I hope that helps.
Don't be afraid to, take that plunge too. If you are sure you see what you are seeing. So if you are seeing, that volume, the indicators that Pat, has, tried to help instill, don't be afraid to, jump out of the nest a little bit and take that position. I don't know how many times that I kind of looked at things where, I'd be like, oh, where's the alerts? Something is up, whatever, 10% or something for the day. That kind of goes hand in hand with, I personally set my own alerts, whether it be on my phone or my computer or not. So if those do hit, and maybe Pat's busy with his own stock or tweeting out a different, something he sees that he wants to get in. But another one's going off and equally looks great. Don't be afraid to kind of, trust what you've learned and kind of apply that.
Yep.
That's the great step that, Pat wants us all to learn is, how to do that on our own and recognize the volume, the breakout. If you do get into it and it reverses, now you're in your own game. Maybe Pat's not, helping you out, or you're putting all your tools to the test, what you've just learned, and you test yourself. And maybe you do well, or maybe you fail, but you keep going, right? And you just accumulate more and more knowledge, on all those runs.
Good points. Yeah, just to clarify, I've never met Matt before in person. Okay. I mean, but I met him on Twitter. Through Mission Winners. And we just kept going back and forth talking about stuff. And it's neat because and that's why we invited him. I'll tell you this and he's not paying us to say this. Okay. And we're not paying him to be here. We're just 2 guys, 3 guys, whatever, and all men and women in here that we're all trying to get better. But he's done well. He's done well by applying these concepts, and he's doing it. And this is the thing that's really neat. You don't have to be a clone of somebody, but he's taken these foundations and he's applying it. But what's even cooler, he's not just doing it with stocks, he's doing it with options on the stocks. So the foundations, they work, and he's made money. He's making money. And by the way, I will tell you this, if he wasn't, we wouldn't invite him on this webinar. That wouldn't be right. That would be morally wrong, but he is. He's doing it. So I wanted to share that with you. That's just for credibility. Anyway, I like it.
The kind words.
You earned them. It's good.
Here's a question that is extremely subjective. Let's get some opinions on this. I just joined, but how long did it take you guys to be consistently profitable?
You want to go first, Matt, or do you want me to go first?
Yeah, I'll get the ball rolling, I guess.
Take it, buddy.
It's very subjective because, if you weren't here at the beginning, I kind of had mentioned that we're all kind of running our own race. The bad thing about social media or instantaneous news is that you see all these people on social media and all these images of success stories and whatever. It's all crap in my opinion, but that's a different conversation. But all you see is like these people doing extremely well. Whether they're doing well or not, I don't really know. I don't really care. but your game is within yourself. For me personally, how long did it take? I started young, so I kind of learned what I thought my mistakes were then are different now, but I was growing as a human. I was going through different stages in my life, learning myself, forget about trading. I was learning myself and who I was and, and all that. So that affects your trading on how you implement it. Probably, I was breaking even for the first 3 years, 4 years. Probably 3 years. Blown a few accounts after that, and then everything started to come together probably year 4, late 4, 5, something like that, when you started to see some really turnaround numbers. Yeah, probably around year 4, and the numbers really started pick up and make sense. Everything was clicking, if that makes sense.
Yeah. You want to take it, Owen? Or would you like me to? What would you like to do, buddy?
Well, I guess I'll just say it takes a while to get good. It takes a while to be consistent. And there's a difference between, I guess, being consistent and actually finally making money too. It's one thing to make good trades and be relatively consistent in making trades and cutting those losses. Cutting losses is huge. You've got to get to the point to where you can accept that small loss before it turns into one that you just can't accept. But it's years. I mean, to get good. I think Matt said he's been doing this for 8 years. I've been doing. I've dollar cost averages into the market since 1987. Since 2002, I became an active trader. 2006, I started becoming a little bit more hands-on. Took my accounts from Vanguard, where they were with primarily mutual funds, and started actively trading those. And now I trade, I guess it's 7 different accounts. So at this point, I'm pretty comfortable. But I still need to get better. And I tell Pat, I have problems with allocation. I have problems with getting the size right going in. And sometimes it's because I'm dealing with multiple accounts, and sometimes it's not. But there's always something more to learn. But this is by far the hardest thing I've ever done. And I've had a couple of businesses that were okay and such, and I semi-retired at an early age, and all that was great. But this is definitely the most difficult thing I've ever done. And it's challenging every day. It's not that you don't get to a point to where, and I'm sure Pat can chime in on this as well. It's never where you get to a point where, oh, this is just no big deal. You do want to get it to the point to where it's kind of boring. Matt touched on that earlier. That's important. It needs to get to the point to where, that's just what I'm going to do. The stock does this does that, I do this. No big deal. You just do it over and over again. But there's still always something to learn, and it takes a long time. And I would recommend having someone that you can talk to. I mean, having Pat, being able to talk with him is huge for me. And it's made a big difference. So thanks, Pat. Appreciate that. And I'll turn it over to you.
Oh, you're kind to say that, Owen. I appreciate it. My story was this. I taught on the university level for several years out west and here in the Midwest. I've always been fascinated with the markets. I got involved with it, and I was a stockbroker. And it was 1986. I'm in my 20s, and I'm a stockbroker. And I'll tell you this. I was managing money, but the big one was this. My dad died. He owned a hardware store. He was gone. My mom owned the business. She sold it, and she gave me money to invest. And I realized, I've got to get this right. She's widowed. I can't lose that money. And I had to get serious about it. And it was like a vision quest. I mean, folks, I want you to picture, your mom's a widow, you're managing her money, and you got to make sure, and you got to send her money every month to pay her so she can live, okay? You're sending her, $7,000 to $10,000 a month for stuff, okay? Which was like, Anyway, it was a pressure. I couldn't do it today. It'd probably kill me. All right. But I started really studying the market, and I think I'm grateful for this. I went on a quest on trying to figure it out, and I read Martin Zweig's book, and then I'm grateful because I met Martin Zweig, and listening to him and talking to him and following him, I completely missed the crash in 1987. All my accounts were out. Okay, we were gone. We were out, and I'm not bragging. I'm grateful. All right. I mean, I had a client who was a big doctor. Okay, a big name doctor, and he called me up crying. Oh my God, what happened to it? Are we okay? Are we okay? He was a foreign guy. I said, doctor, we're fine. You were out. And then he really started crying. So Martin Zweig helped me. And then after that, a good friend of mine that was also a broker, okay, recommended, and this was like 1989, recommended a book called How to Make Money in Stocks by Bill O'Neill. I thought, oh, I'm going to get that book. I got that book, and that changed my life. Bill O'Neill changed my life. I will tell you that right now. I completely got immersed with it, started managing more money as a broker and an investment advisor. And then I was also managing money through people through Fidelity funds. And all these things gelled together, and it really helped me. Now, was I consistent? Folks, you got to remember, we're doing okay. And then there's the crash of 87 and everything got screwy. So I really couldn't do much of anything. I had to study. We were out. The accounts were intact, but I had to figure out what was going on. So I really went studying really deep. And then I'm grateful because in the early 90s, I was able to go and see Bill O'Neill in Chicago. And because I had a relationship with that company, and I'm not going to explain what it was, I was able to sit down and meet him and talk with him. And that really helped me. And a couple of years later, I met him again in Houston. All right. We actually sat down and had lunch, and David Ryan was there too. And this isn't bragging. It's just, I was trying to soak this all up. And again, the reason why, I had to. I couldn't sit there and lose that money. And it was a freaking pressure cooker. At the same time, we had 4 kids. So I had to try to figure it out. And I worked at it. And I started putting pieces together. How long did it take for me to become personally consistent with it? I didn't, in 1985, 86, I didn't have any money. Okay, I was newly married. My first son was born. I'm grateful. I was being consistent after about 2.5 years. And through time, it kept growing and growing. And we finally got to the point where I was still managing money through Fidelity funds, that I was making more money from trading profits than I was in salaries, commissions, and fees. And so I talked with my wife. I said, you know what? I'm getting out of here. I think I'm going to do this. And so we got out. It was back in the 90s, late 90s. We got out, and that's been it. That's been what it's been, is just going at it. We're here for a short time, trying to help other people, because it is hard. It is hard. So anyway, that's it.
I have a quick question, if you don't mind.
Sure.
Thank you. With all the market volatility that we had with GameStop and the Reddit folks, Mohammed Al-Arian had a good article in Barron's, and he said that we were a hair's breadth away from a market incident, is what he called it. But if you have all these hedge funds selling their positions to cover their short, and we do have a huge meltdown, how in the world would we get out of all of our positions?
Great question.
How can we do that physically?
Anybody want to take it?
Yeah. So for the most part, us retail investors really won't have a problem for the most part getting out of positions, because we aren't trading with the size that some of the big boys are trading with. So that is most certainly your edge as a trader, that you are way more nimble than these big guys. These big guys take days, weeks to unload and load a position. So, us, we'd be in and out the same day, no problem. And, that won't be an issue until you get substantial size. And, for the most part, we really won't have to worry about that kind of thing.
So basically what you do is just go down the line and issue sell orders for everything at market, right?
Well, if the market's going down, my stop losses are already in place. So,
They
I'm
would
not
trigger.
freaking out.
Okay.
You don't want to get caught up in, the famous MSNBC. I don't watch it anymore, so I don't even know what it is. The news. You don't watch the news. About what they say about what the market's going to do. I got my stops in place. The market could be down 400 points, and there's been plenty of times where my stocks are just kind of going sideways. Just kind of going sideways and behaving, acting normally. The very strong leaders in most traditional bull markets will do that. They won't, you won't get huge fluctuations in your portfolio. They'll, for the most part, trade sideways or be a much more mild correction as opposed to the general market. So, I would advise don't get in there and go crazy and start selling everything because, you don't want to lose everything. Relax, remember that it's your system. This is your emotion winning now. Your emotion is winning. Your emotion just took over you when you said, well, should I go in and sell? Wait, is my system telling me to sell?
Mm-hmm.
It's not. Let it ride. Let it ride. Maybe trim a little bit. Never hurts to take a little off of the top if things are a little crazy, especially in a volatile market. Trim a little bit, and you can sleep at night. That's primarily what I do. It's been a crazy move since a couple Fridays ago.
Mm-hmm.
We've had a pretty aggressive jump from below the 20-day. So, I expect a little volatility. So what am I doing? I'm going in a little lighter, maybe taking profits a little quicker, looking for that volume, that kind of thing. But definitely, the best thing is just adhere to your system. Try to take out emotion as much as possible. Don't get caught up in, the hype. We'll be able to sell. We'll be able to buy. Well, if you're using Robinhood or some other ones and you're involved in AMC and that kind of stuff, I guess you can't buy and sell. But, for the most part, I would say stick away from stuff like that.
Sure.
Yeah, that's
tied in with that. And this is really important. I'd encourage all of you, because you're all students of the market, go back and look at September and October of 1987. Because everybody says, oh, there was a stock market crash. Hey, folks, there were tons of warning signs before the market crashed. There's always tons of warning signs. I've seen everything since. You go back and look at it. Take the time, go on MarketSmith and look at a daily or weekly chart back in 1987. You go, geez, that son of a gun was dropping hard. Holy cow, look at that. It gave you my accounts were all out a couple of weeks before the crash. We were out. And it's not because we're so good. It was the market was dropping. And you could just see, just like you can see it now. Remember back, what was it, last year, the market melted down? And we just watched it and we were out. It will tell you what to do. But I do have to say something here, and this is really important, okay? And I don't want to bring up a downer, but I got to bring it up, okay? All of you, you know how to manage it when it's dropping and how to get out. But you need to know on your platform, there should be an icon someplace or a button, whatever, that says closed all positions. You need to know where that is. There's one on Interactive Brokers. That I do know, okay? You can say, why do you bring that up? I will tell you this. I was there for 9/11. 9/11, they stopped trading. didn't have time to sell. They stopped the circuit, everything shut down instantly. If there had been, and this was also when we were phoning orders in, we weren't doing it on a computer. So I just encourage you, not sounding negative, know where that is, where you can close all positions. And I'm not saying it's going to, okay? But you need to know where that is. So if indeed something awful happens, and I don't think it will, but do you know the future? I don't. You can get out of everything in literally 2 seconds. Just wanted to share that with you. So, Owen, what do you have to say, buddy?
You know, it's interesting, you know, with getting out of the market. I thought I'd just share this story. Back in 2000, this is really where I started getting an interest in handling my own accounts. Going into 99 and 2000, of course, the market was way high. We couldn't make any errors going into the market in the 90s. Anything we bought just went up. And sometime in 2000, I wanted to go to cash. And all my accounts were with Vanguard at the time. And this is nothing against Vanguard. This is just the way brokerage services work. But I called my Vanguard rep and I said, hey, I think the market is reaching a top here. I want to go to cash. And he says, you want to go to cash? I says, yeah, I want to go to cash. And I says, and then I'll get back in when I think the market comes back around. Well, long story short, and 5 or 10 minutes later, he talked me out of it. He said, no, he says, you don't want to go to cash. So I hung up the phone, had 2 sleepless nights, called him back and said, I don't want to hear your story. I don't want you to tell me why. I don't want to hear any of that. I want to go to cash. So I went to cash. And then the market, took a dive. We all know what it did in 2000. It wasn't that I was so smart. I just started looking at things and it was just unsustainable with what was happening. And then ended up getting back in 2003 and becoming more active. But anyway, that's my experience. When things go, when the market starts to roll over, I mean, 9/11 is a black swan event. Those are pretty rare, but they can happen. But typically when a market starts to roll over, we have a lot of warnings and we have a lot of days to unwind those positions.
I think I've learned more in the last hour than I have in the last 6 months.
That's good, Ryan. Good job, buddy. I like that.
One last question, if I may. I read that, and actually, you're talking about Dr. Van Tharp. I actually got one of his books on position sizing and stuff. And then he said that trading is more like a numbers game because you're actually playing with probabilities and stacking those probabilities into your favor. And the more you play the game, the numbers, if you're playing it correctly, keeping your losses small and riding your gains as long as possible, then the more you trade, technically you should be gaining more. I'm struggling with that idea because I want to increase the probability of wins. But then as Matt said, managing so many positions just, crazy, and I can't handle it either. So what do you think is the sweet spot?
Take it away, whoever wants to.
All right. So what is the sweet spot? Numbers game, probability. Hearing it is one thing. Understanding it is another. What does it mean by this probability numbers game? It really started to make sense for me when I started looking at the business model of a casino. And what do I mean by that is that casinos generate 90% of their revenue from slot machines. Slot machines don't hold they're not very, I mean, you don't make much money on a slot machine. It's in the masses and the numbers paying out so little. It's all in the numbers game. They might make like 7%, something like that. They take in billions of dollars, but you're only making 7%. So I thought, well, trading is the same way. I can do the same thing if I play the numbers correctly. So I still do it, but I always recorded my trades. So I always got a notebook, my entry price, my exit price, how far I was away from the buy point, what my total risk was at the time. So it can get little crazy, as you kind of get into it a little bit. But as you start to figure out what your typical risk is and what your typical gain is, and just by nature, your win-loss ratio, I win something like 42, if I were to look at it last month, like 43% of the time. My win rate is not that great if you look at it. I'll take 10 bets and I'll maybe win 5. But why are my numbers, why is my P&L stacking up the way it is because my wins far outweigh my losses, far outweigh. So I might take 3% on a loss in those 5 bets, 5 out of the 10. But in the 4 bets, 4 or 5 bets that I do win, maybe it's 10, 12, with options, it's a little different. But you understand what I mean? The difference there, the risk and rewards, 2 to 1 is great. 3 to 1 is even better. If you get hit 3 to 1 risk odd, wins, losses, keeping your average gain in that 3 to 1, you're going to be doing amazing. So that's kind of, the sweet spot. Like I said, I prefer 3 positions, and I can manage those very effectively. Anything more than 5 can get a little crazy, especially if you're doing with options. So, it's a little bit more difficult in that stance. So I hope that answers your question.
Yeah, it helps. I don't dare to play with options. I don't understand it, and I know it can really backfire on me. So I'm staying away from that. So I'm mainly just a stock investor. But then I'm thinking like, oh, maybe because like Pat says, I'd rather risk $2 to get possibly $20 or whatever the ratio is, right? You can risk 1% to earn 20%. So I'm thinking, well, then maybe I should make more trades. If I make more trades, then does that help the odds to my favor?
Yes. Well, based on, if you're keeping a hold of your journal, you'll be able to see, your wins and losses out of your, let's say 10 trades. So taking more trades, no, I used to take, upwards of 40 trades a month, thinking that was the answer. Now my schedule is different, so it's a little different, but my sweet spot when I was trading stocks, couple positions, maybe a week, not really a whole heck of a lot. The sweet spot is minimal, in my opinion, minimal and sound. If you can take those 10 positions, you lose on, 5 or 6, let's say 6, cutting your losses is of the most important, because just like in the casino, they can ruin their whole month. Their whole month can blow up if you're getting their reports by one bad bet. One guy comes in there and cleans the house on blackjack, or, a mega, jackpot goes off on the slot machines. The casino is screwed for that month because they're not playing with much margin there. It's the same way with trading. One bad trade, you might be good 2%, 2%, 2% loss. You have 1 6 or 7% loss, screws up your whole numbers for the whole month, wipes out any gains you may have had.
Yep.
And you just gotta make sure that, if your average loss is 3%, where am I trimming? I'm trimming, me personally, when I was doing stocks, I was trading in multiples of 2 of my average loss. So if my average loss was 3%, I was trimming some of my position at 6% gain, and then again at 9%, and then again at 12%. So I was just incrementally taking a little off the top multiples of my loss. So, and then I'd let the rest go, maybe taking the last little shares at, 12% or 9%, or still multiples of my loss. Break even.
do you still do that with profit taking? Do you take it at increments, or do you like what Pat does? He watches for more downward volatility, and then he's like, okay, let's lighten up. Like what's your style?
Yes. So with options, it's much quicker. I'm much faster at trimming. You can be up 40% very quickly. You can be down 40% very quickly. Like Neo, I'm gonna walk exactly kind of what I did with Neo. I opened a position in Neo right above 59.50. My average loss on, let's say options, let's say it's 10%. I'm making these numbers up, but it still relies true within my system. So, if I'm losing 10% on average on my options, I am most certainly taking 20% profit a little bit, 30% a little bit, 40% a little bit. If I'm up, if it continues going like that, then there's no really need to keep on selling and, dwindling my profitable trades, but just enough, to where I'm not, the anxiety's gone. So, my options trades are maybe a little quicker. It depends on market timing too. They're getting a little volatile, so I'm a little quicker to trim them. Maybe my options now are maybe 4% loss. Today I took them for 4% loss because I just didn't like the way it was acting. And then I got out of it, got into something else, started to move, trim a little bit, kept the position overnight because it was acting well. Neo.
Right. Thanks. Definitely very experienced.
A lot of errors. A lot of errors. A lot of mistakes.
And related to risk management and complementing your question, Evelyn, I use this phrase a lot, but it's the truth. And it took me a long time to get to there about trends pay is, would you risk $2 to make 20, 30, 40, 50, $100 in a stock? And if you take a look at some of the moves that, or you could say Neo, would you risk $2 to get a quadruple? Because from our first purchase, and I'm not breaking, please, but we kept the loss very small if there was one, but then we'll ride that and ride it and ride it and ride it for as long as humanly possible. And that's to me where it's so important. Matt discussed it, and Owen has too. I'll ride that 8-day and I'll ride that 21-day and the 50-day. I'll take a little bit on the way, but which relieves emotional stress and tension, which helps us make better decision making, and which I've studied quite a bit, and let those shares ride and ride. And you've seen a couple of them, and they all don't work like this. All right, we'll get in line and we'll just ride it for as long as possible. And small losses and hopefully massive gains. And it works. It works through time, and it does something else to me that's very important. It keeps stress to a minimum because we limit the loss. Matt talks about limit your losses and let them run. Let them run.
I was talking about this with Pat the other day with QLD. I help manage I manage my parents' retirement accounts, and Pat had given the alert. This was back in March. Things were turmoil. If you read the news, so we were looking at QLD. It hit a bottom. If I'm looking at it, around $34. Started to go sideways a little bit. This is shares. I'm trading shares. And, above 47.14, I was going to buy, off of that. And what was my risk? My risk was $7. What was my risk? Why was it $7? Is because I could tell that there was a little box forming, the Darvis box. I'm sure if you've read the books.
Yeah.
That kind of thing. I could see a Darvis box forming between 46, 47, and 39. That was my range. If it fell below 39, I was out. But I was letting a $7 point swing dictate my position, and my dad stayed in it ever since. I didn't bet heavy in it, but my dad is not. He doesn't have my risk tolerance, and this was a good fit for him. So we've been in it, back since the beginning, March of 20. So it was $50 when we got in. Oh, it's at 130 now.
Yeah.
So, I mean, very trend breakout risk. I mean, I had all of those in line. I was within my risk parameters. I was, it was a good breakout. I knew that a breakout below the 200-day, the volume is usually pretty light. It's not like you get a very huge thrust like you would see, bounces off the 20 and the 50. Very light usually coming off of the bottoms of the market. So, maybe you bet a little bit lighter. Maybe you give it a little bit more range. Somebody was talking about Mike Minervini. He talks about letting his stocks have a little bit more range. And that's kind of what we did with that. So hopefully that answers your question. There was a perfect example of, stop loss. How do I look at it? What kind of space I give it. So.
Do any of you ever use the moving averages, crossing of the moving averages to signal a buy or sell?
I have a friend that does it, and he's done very well. He's done very well. That's all. Now that was his sweet spot. He didn't mix certain signals. If that's going to be your signal and only signal, I'd probably stick with that. Only the 8 crossing the 20, and when it crosses, I buy, and when it crosses again, I sell. I think Burns. I forget his Twitter handle.
Steve Burns?
Steve Burns, yes. Yeah. He's done that back testing, and it's on his website. If you haven't checked out his website, it's great with all kinds of information. I would also advise, if you haven't seen all of the videos that Pat has in Mission Winners VIP, there's great videos on options, on volume, on breakouts. I mean, that thing is a treasure trove. If you haven't spent the time to go back, as long as that thing has gone back, 3-4 years, go back, start at the beginning, check them all out. What ones interest you? Start with that. A little homework never hurts. And when you're talking about, you're going to do homework, doing work or this, why not, a little homework to enrich, yourself, and the people around you.
Awesome. Thank you, Matt. Thank you. I thank you all for your time tonight, and as does Matt and as does Owen. And I mean this sincerely. I respect your drive and your ambition and your passion for doing this. And we'll do everything we can to help. And I mean that sincerely from my heart. I know what it's like. I know how hard this is. But hey, we're here to help. We're here to help. So, and I admire your questions. They're great. So thank you so much. I know this went a little longer. Owen, do you have anything you want to say, or should we just wrap it up?
I think we should just wrap it up.
Excellent. Let's do it. Thank you all very much. I look forward to seeing all of you tomorrow at VIPs. This is great. Have a good, safe night. I tell you to stay warm, but I just don't think it's in the cards. Ooh,
thank you so much for everything.
So thank you all very much.
Thank you, Matt.
For your time.
Thank you, Matt.
Thank you very much, especially Matt.
Thanks,
too,
Pat.
for hanging around so long.
Thank you.
Thank you.
Absolutely.
Thank
yeah.
you.
You're very welcome. Hopefully you pulled some good information out of everything, and hopefully it's beneficial, coming from a different light. So.
Very nice of you.
Well done, Matt.
We all learned some nuggets, I'm sure.
Pat, I have to tell you, when this COVID first started, I thought, what the heck am I going to do with my time? I do a lot of volunteer work and stuff, and so I got 3 weeks free of the IBB Live. So I looked up course, you get hooked on it. You know, you go those 3 weeks and you're like, well, what am I going to do now? You know, so I bought it. So I listened to it for about not quite 10 months. And I found myself yelling at the screen because I didn't like the way they traded. And I thought the way they traded was kind of, you don't realize how you taught us by when we had the IBB live meetings. And so to go see the way someone else trades, and to me, it was totally crazy because I started following their trades, you know, saying, okay, they bought this. Oh my God. I mean, they'd look at stocks in group 193 or 196, and I would be going, and I have to tell you, David Ryan got on the call. He's going to be on tomorrow. That's my last IBD Live meeting. But he got on the call about a month ago, and he said to him, I don't understand why you guys are looking at these stocks. The bus has left the station. It's time to look at something else. And I thought, oh my God, I've been screaming at the screen for a month, you know? So that's when I said, IBD Live is going away and I'm going to Mission Winners.
Thank you.
Where someone trades like I do, so.
Well, yeah. Denise, thank you. Thank you very much. I appreciate it. That touches my heart. Y'all are great. You're great. So thank y'all. God bless y'all. Have a good, safe night. And like I said, we'll do this again sometime. And I love your passion, all of you. So keep going. And Matt, thanks for being here too, buddy, and chipping in so much. That's priceless.
Absolutely. Absolutely. I appreciate everyone for coming in. And thanks, Owen and Pat. It's finally great to, see you guys in person and meet you. And
it's awesome.
I look forward to doing it again. I think this was great for everybody. I mean, geez, I had this when, when I started.
Yes.
Oh my God. Because you spend so much time navigating by yourself, not knowing what the heck you're doing.
Oh yeah. I mean, I remember my good friend Tom Edison. He had just invented the light bulb. I'm going way back.
Well, thanks.
A good dinner, everybody.
Thanks, Tony. Good to see you. Good to see you, Denise. Thanks now.
Okay.
Thank you, sir.
Good night.
Bye now.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.